Joining us now to have that conversation, I'm very pleased to say, so we don't have to talk about it, he does. Joining us now is Steve Tananbaum, the founder of GoldenTree Asset Management. Steve, it's good to see you, sir.
Great. John, Lisa, great to be back.
Thank you for being with us. I was listening to some of your comments immediately after the election, where you said it might be more bark than bite, that maybe people are getting over their skis just a touch. Where do you think we are now, and what are you expecting?
So listen, it's been a lot of enthusiasm, a lot of hope, and it's great. And prospects look like they are accelerating, improving, and valuations suggest that. So my guess is it's not going to be a one-way train, a one-way trip, and that we're likely to get a pause. What does it mean 6 months to a year from now? If you look at the Reagan analogy, there was a lot of hope build up. The first year was tougher, but then it built on that, and it ended up being a very good experience. And there's no reason to think you can't have different environment but similar results over time.
Is confidence sufficient to generate economic activity? Because confidence feels sky high, speaking to American executives, and you see that in the sentiment surveys over the last few months as well. Do you see that translating right now into superior economic activity?
Absolutely. There's a lot of excitement, and there's a can-do attitude, and people feel good.
So Davos always tends to be wrong. People get together and they have this conviction, and then the exact opposite usually happens over the remainder of the year. I just keep that in mind at a time where the conviction seems to be American exceptionalism, growth is going to go gangbusters, and there's this huge fly in the ointment, which is the debt market and what rates are saying. How much does that worry you?
Great question, because will we get the cuts that the market's hoping? And a lot of the valuations are assuming that rates have a downward bias. And if they don't, and have an upward or a flat bias, will that hurt valuations? If you look at nominal growth rates, which we think will be about 5%, so nominal is inflation plus real. And if real is a higher percentage than inflation in that 5% number, that's a good thing. And there'll be room to cut. But if it's about the same, or there's more inflation in that nominal number as a percentage of the total, then it's going to be a pause, and that's not going to be good for the markets.
Based on that, are credit markets, in particular high-yield markets, priced to perfection, sort of leveraged to both the growth and the idea of potential cuts?
You're leading the witness, by the way.
But Lisa does that a lot.
Carry on.
Yes.
Please, answer.
As long as the market's constructive about growth, valuations make sense. If there's volatility on, is inflation accelerating? Is there a concern that you're not going to have cuts? You may even have an interest rate spike or pause, then that's going to be different. Some of the outliers, like the tariff conversation, I'm less concerned about today.
How much are you actually starting to look outside the U.S. because of valuation story? I mean, this is something we keep hearing about, going to Europe.
Sure.
We're here, but also investing.
So one of the interesting things on Europe are the real rates are quite low compared to the U.S. So if you look at economies, for instance, like Germany, you could say, well, there's low debt to GDP, and their real rates are called, the 20-year rates are under 1. So that you could kind of make a case for that. I don't think a very good case. But when you look for something like France, where it seems like they have worse flexibility, they're might be spending more on defense, less entitlements, less growth, and those real rates, or the 20-year rates, are in the mid 1s to low 1s, and the U.S. are in the mid 2s. It doesn't seem right. So the real rates in Europe seem high. I do feel as if, when you look at the Mario Draghi report on competitiveness, there are solutions. There is self-help if they choose to do it.
How much needs to go right to generate bigger returns out of Europe? Because expectations into 25 are exceptionally low. And we've seen one earnings report, I can think of Richemont in the last week, came out with a decent earnings report, stock up 10, 15, 20%, just like that.
John, it feels that way. So you look at, for instance, I was talking about Draghi's report. He singled out telecom, where they used to very much encourage competition. So retail prices low, but as a result, you couldn't reinvest in the properties. in the systems. And as a result, the investments the companies sell for very low multiples. You take something like a Vodafone, if all of a sudden consolidation occurs, which occurred, and that they allowed the investment on their systems to have appropriate returns, those valuations could be up 50 to 100%. So I could see it. Look at something like Germany in Vodafone. If that's stabilized and you believe that there is a good investment, that could be really very attractive.
Before we let you go,
Yep.
Last year you sold your crypto business. This year, crypto's gone crazy.
Yes.
Do you regret it?
You know what? Not at all. And because it's in a better home. I mean, we've done some things that have been crypto related, and the firm Republic, who we sold it to, was just a more appropriate home for it. But and I think it's an interesting space. I'm not so sure if the valuations justify the fundamentals today, but the fundamentals are very strong.
How do you value these companies? How do you value these things? What are the valuations of them? I've heard from traditional investors who just say, I can't have tolerance to invest in something if I don't know why it goes up or down from week to week.
You know, I try and focus on what I can analyze, and there's enough of that than to worry about what I can't. And, you know, there's very much, it's a concept. And you could have said that about the internet in 2000.
It's true.
And, you know, it's a concept, and some will be realized and some won't be.
Steve, appreciate your time. It's always good to hear from you. Super smart. Steve Tananbaum there of GoldenTree Asset Management.